Finally, it looks like we are back in the bull market. Most altcoins are up. Bitcoin, of course, helped the market. I believe it's important to understand how much more upside for Bitcoin there potentially is, because Bitcoin is leading the trend. When Bitcoin crashes, the altcoins go down even further. When Bitcoin continues to rally, the altcoins have more upside as well. Now, at first glance, the situation is a bit problematic, because what we've got over here is Bitcoin's long-term price. So this starts in 2010 when Bitcoin was just a few cents. It goes all the way to today. So this is a logarithmic chart. And those two lines here, they connect the bottoms historically pretty well. And they also connect the tops pretty well. And according to that trend channel, the current risk, which could be a drop of 57%, which could bring us down to 40K, relative to the reward, which is only 16%, where you might stop rallying already at 112K. It's not that great. And so if this is all that we consider, then it might make sense to be careful. However, I think there are some data points that are encouraging. Here's the first data point, and I talked about this several times on this channel. I'm not going to go in too much detail again, but what we've got here with this line in turquoise, that's the 120-day simple moving average. And a very straightforward trend following strategy is to buy whenever the price is above that moving average, and to sell or even short Bitcoin or bet on falling prices whenever the price is below the moving average. So we want to just take advantage of the current momentum. And currently we are above that moving average. So here's that simulation. It starts in August of 2017, goes all the way to today. And I've backtested all moving averages from the 2-day all the way to the 200-day. And that's then the result. So the moving average duration is on the x-axis. On the y-axis, we've got the annualized performance. The 120-day simple moving average historically worked the best for BTC. And here is how well that worked. So we've got the Bitcoin price in white, and we've got the back-tested performance in turquoise. And this is a linear scale. We start with $10,000, and of course the backtest outperformed buying and holding Bitcoin by a lot. Here we've got the same on a logarithmic scale. So again, the appreciation is very, very constant. We do get our 10x every 3 to 4 years roughly. We take advantage of down moves because we short Bitcoin, but we also make money as we are rising. And so that's the reason why we should tend to bet on rising prices at the moment. Now, besides this argument, there's actually an argument against this long-term trend. There's a real case to be made that this upper resistance line might break. We might actually go above 111K. And here's why. What we see over here is the stablecoin market cap. So it shows how quickly do stablecoins get minted, or how quickly does money flow from the fiat system to the crypto world. Because this is going up whenever you deposit your hard-earned fiat currency on a centralized exchange. The centralized exchange might then send this over to a stablecoin issuer like Tether. Tether then holds custody of the funds and issues the same amount of tokens of USDT on the blockchain. And we can see that creation and also the redemption of the stablecoins in this chart. And it is a relatively stable chart with very little volatility. And we continue to now expand. Money continues to flow into crypto. And so as per tendency, we should see crypto prices rising. But of course, sometimes we do see those 20-30% crashes even in Bitcoin. And this happens just due to swapping. So people swapping their stablecoins to Bitcoin and from Bitcoin to stablecoins. The swapping activity is creating all the short-term price action. But the swapping activity is also very nicely captured with this chart. And this is now the stablecoin dominance. How much of the entire cryptocurrency market cap is currently in stablecoins? And when this is very high, then a lot of people have swapped from risk on assets like Bitcoin to the stablecoins. And when this is rather low, it means that people are highly deployed into the market. So crypto prices are high. There isn't that much more dry powder on the side. And so let's have a look at this chart. Let's zoom out a little bit. We can see over the years, we got more and more stablecoin adoption. People then got risk on in 2023. So the stablecoins got deployed. Crypto prices were very high in March of 2024. They were also very high in December of 2024. So there's an inverse correlation here. Whenever this is going down, this means crypto prices go up. Whenever this is going up, crypto prices go down. So people are fearful. People have swapped to stablecoins. And so it appears as if we are in a somewhat constant trading range in the last 1.5 years. And our current level in the stablecoin dominance corresponds to what we have seen in November of 2024. Now, what is going to happen to Bitcoin and to crypto as a whole if we see this repeating itself? Let's take the bull case. Let's say we see the stablecoin dominance coming down, people deploy their stables. How did Bitcoin appreciate from the 4th of November to the 5th of December? If you were to see the same thing again in the stablecoin dominance, what would happen with Bitcoin? The answer is this long-term resistance line will break quite massively. So here we go. Let's zoom into the recent price development and take exactly those data points. The 4th of November to the 5th of December, when we overlay that price development to today, we see Bitcoin potentially at $146,000. So that's a rally of more than 50% from here. And so yeah, that's the potential bull case. Does it make sense to hold all the way up to 140K? I'm not so sure. Maybe it makes sense to already sell some once we hit that resistance, the 111. But the market still being comparatively risk on and having a lot of dry powder on the side to potentially deploy, while momentum tends to be bullish again, is enough of a reason to get in again. This long-term trend might finally break out to the upside. Of course, at the same time, we will see the altcoins appreciating even more, right? When Bitcoin is going up by 50%, then the less liquid, smaller market cap altcoins are going up by 100, 200, potentially 300%. What's more important though is to find the proper exit. There's too many people that made money with meme coins and then lost it all and some, just because of greed, just because there was no signal to potentially take profit, to potentially rebalance the portfolio. Here are the things that I will be looking at. I will look at the value days destroyed for Bitcoin. So when the long-term holders are selling their Bitcoin, when a lot of the dormant Bitcoin suddenly starts moving on-chain again, that's when I sell. That's potentially a good sign for an exit. It doesn't always show the perfect top, and yes, there might be a little bit more upside, but then usually the additional upside happens with the altcoins, not necessarily with Bitcoin. So people tend to sell BTC and then either exit the market or start with altcoin speculation. I'm also going to look at the realized HODL ratio. So how much speculation is there currently among the short-term holders versus the long-term investors? When there's a lot of short-term speculation in the market, we want to exit. Whenever there's only long-term investors in the market, we want to buy. And of course, I do believe that we will at least hit the heights of November 2024 again. But at that point, it might make sense to sell at least some Bitcoin. There's also the market value to realized value Z-score. So this shows that how much is the market currently in profit relative to the volatility of the price. If the volatility is very, very large, we can afford more profit. If the volatility isn't that large, we have to just rally for a bit longer until this turns red. If you reach 140K very quickly, this is likely going to hit the red one more time. There's clearly money flowing in, not just from the stablecoin market, but also from the ETF. There were only positive Bitcoin ETF flows in the last few days. This of course helps the price as well. But what's even more important than the ETF flow, so that's now here in green, is actually what the long-term holders are doing. And the long-term holders, interestingly enough, are now buying, despite the price going up. So again, this is the ETF flows, but now compare this to the long-term holder supply change. It's way larger in magnitude. When the long-term holders sell, we want to sell as well. When the long-term holders buy, we want to buy as well. And usually they just buy when prices are depressed, but suddenly they start again getting into the market despite the recent rally. And that's probably because many long-term holders look at similar data to what we have looked at in this video. I will also look at the CBBI. So this is an aggregate metric. And when this hits 90 or above, it's also a good selling opportunity. A lot of those indicators correlate. A lot of those indicators turn red at the same time. And then it's all a matter of taking profit. But right now, it seems like momentum is turning bullish and there is potentially more upside than just the 111K. Now, whenever those signals turn red, whenever it might make sense to take some profit, I will of course share this here in this channel as well. I'm not always bullish. I'm even sometimes called the perma bear, but I'm not always bearish, right? I try to figure out what is best objectively. So if you appreciate this, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out the premium membership. So this is where I share my own trades. It's down below. It's thebitcoinstrader.com. See you next time on YouTube or see you in premium. Cheers.